Hello guys, welcome to our trading channel. Alright, so in today's video we're going to show you how to mark up your chart like a pro. Now, if you are a swing trader, if you're a day trader, if you're a position trader or a scalper, this video will help you, because in this video we're going to delve into how to mark up your chart like a pro by understanding a hidden resistance and also support, and knowing where the market is set to turn in future. All right, so irrespective of the kind of trader you are going to understand the basic markup techniques and also a simple strategy you can apply in your trading, and also a common mistake to avoid. All right, so before we dive into the trading proper, it's very important for you to understand there are 4 categories of trader, and you need to understand what categories you fall into, because to know the time frame that you should be working with. All right, so we have the first categories that we call the scalpers. The scalpers are guys that they take action within a minute or within 5 minutes, and they enter position. Now the markup time frame for a scalper is 1 hour, whereby the entry and the exit can be 5 minutes to 1 minute. It just depends. All right, so also we have a day trader. The day trader, the markup chart is 4 hours, while the entry and the exit is 15 minutes. All right, so also we have the swing trader. The swing trader, the markup chart is daily chart, and also the entry is 1 hour. Then we have the position traders. The markup chart is weekly and the entry is 4 hours. Now we have to have this in back of our mind, because once we are using the higher time frame to identify a turning point, a support and resistance, whereby you are using the lower time frame as the entry and the exit. All right, so that is the basics in understanding a simple techniques on how to mark up a chart. Now, the most important thing for us to understand before we delve into it is this: that every chart is a visual representation of all the market participants. We can see that the market moves up, it moves down, it moves up, it moves down. So all these movements are being interpreted using the behaviors, and wherever human is involved, pattern can be seen. All right, so the concept is simple. You choose the time frame that you want to work with, and you go to the higher time frame. Like we're using the day trader strategy. We're going to go to 4 hours, 4-hour charts. We mark the support and resistance, and then we go to the lower time frame to see the reaction at that support and resistance, and from there we take action. All right, so what we do in a higher time frame is simple. Once the market makes a high, a lower high, a higher high, a lower high, a higher high, a lower high, a higher high. So we're going to mark up all these support here and resistance. We're going to mark up this support, we're going to mark up this resistance, mark up this support, we'll mark up this resistance in your higher time frame. After you have marked up this, you watch out for the reaction here. If there's a rejection here and a confirmation, it might take a sell that comes here. You watch out for reaction here. If there's a rejection or a support here, confirmation, they might take the buy and stuff like that. So that's how we ride the waves, and that's how we trade using markups. All right, so take a look on these simple markups here, guys. On this 4 hour, this is gold 4 hours chart. You can see the market started from here, and we have marked up our support. We've marked up this point, we marked up this resistance, we marked up this, we marked up this, we marked up this, we mark this, we mark this. So as the market is moving higher, you're marking this range. We switch to 15 minutes and watch the reaction. It's moving sideways. Now coming to this point, you can see once the market retested this previous support here, there was a bullish engulfing candle, which was a clear indication that that might be a reversal, and that plays out. So this is a sign for you to take action on the market, because there is a confirmation. You can see the M pattern there, the market sell off, and you're selling off to what? The next support, and that plays out, after which the market continue. So you are just trading the reaction on this zone. The market breaks out here, and looking at this, there's a free traffic. The market just went up to this zone and comes down, found a support, but it actually breaks and comes down again. So all you are waiting for is a bounce. Once the market comes to a certain support or resistance, you wait for a bounce. And once the market comes to a range like this, you find out that even though you are taking a trade here, you see the resistance is closer. So this is a close, tight range. You shouldn't be taking a trade at this. So at the break out of it, you taking a trade. And even if you want to take one, now at the candle closes above, you are taking any trade, you are putting your stop below this. All right, and see what happened. The market actually went break out of it and it's going up. It comes to another range. You see, it comes to another range and it tests it multiple times, closing in below it and above it, and finally moves high. So you see how clear this is, and actually the market breaks out and retests this. So break and retest in a smaller time frame is a very clear signal or indication that the market will continue moving in that direction. All right, you can see the market actually break and retest. It's a very strong signal that that market will keep moving in that direction. Okay, this is Bitcoin on the 4 hours. So if you want to trade this, you simply mark up your chart here, mark up your charts using the 4 hours, common resistance, and the support levels here. You mark them up here. All right, so I've marked up this chart with the support and resistance here on the 4 hours. You just go to 15 minutes straight down and you see what actually the market is doing. So here now we can see that there's a reaction at this point. We have a reaction at this point. All right, so now the market has come here and it's reacting, all because there is a resistance at this point in a higher time frame. So two things you're waiting for. Now the market actually has given us a high and a lower high and a higher high. So you're waiting for this trend to break. At the confirmation of that, that might be an indication that the market will continue pushing downwards and stuff like that. So you can see clearly using just support and resistance in a higher time frame can help to simplify your decision making in the lower time frame. But without having the idea or where the market is going in a higher time frame, it might be in a dark in the lower time frame. All right, and you might be reacting or trading against yourself in the lower time frame. So if you put a trend at this point, just watch out for it, guys. At the confirmation of the break of this trend, you can take a decision that the market will keep pushing downwards. Also, if you take a look on the pound yen, all right, so I've marked up this already before now, but you can see what I've done here. This is the beginning, right? Market moves from here to zone on the 4 hours. It has a bounce here, bounce here, bounce here. So you just mark up this on the 4 hours, then you can switch to 15 minutes to see the reaction on this zone. From there you can see exactly what the market have done and how you can take action. All right, if you move to 15 minutes, you can see exactly what the market is doing. Now, what can you tell from here, guys? See how beautiful this has been. That once you mark up your zone on the 4 hours, you can see exactly the market is moving in that range. All right, so this is a beautiful setup for you if you understand how to take a trade from zone to zone, from zone to zone. Now, let me tell you one secret. One of most things that most of the scalpers they do is once they mark this zone, once the market comes here in 5 minutes or so, they are taking trade. All right, and once the candle closes bullish above these levels, you are taking trade, buy or sell, and they are just targeting 10 pips, 5 to 10 pips, and they close the trade and stuff like that. And oftentimes they are more right than wrong, because this is a range and this range has been confirmed over time. All right, so this is just the way we roll, guys, and this is the simplest way you can actually mark up your charts using higher time frame and confirmation in lower time frame. I believe this video has been of value to you, and if you find this interesting, please don't forget to like this video, don't forget to subscribe to this channel, and don't forget to click on that notification bell, because more content like this will be released on this channel, which will be useful and beneficial to your trading career. Thank you so much for your time, and see you in the next video.